So it's Christmas, everybody's off work, so I thought I would do a 5-part series on how to read and master the charts. Now, I've been trading successfully for around 6 years now, and if you've been following me, you know my trading style is very simple. It's just support and resistance with my binary destroyer, trends, pullbacks, higher highs and higher lows. And with that, I've been able to sustain a full-time income for the past 6 years. I get to drive around in Lamborghinis, I have a nice house, I get to travel a lot, and that trading style, even though it's very simple, can be very lucrative and profitable. So let's forget all the talking, let's jump on the charts now and go over the first part series, which is about order flow. Mastering the Charts, Episode 1. Order flow. Order flow can be valuable to market makers or other types of traders because it reflects the potential momentum of a currency pair's movement. For example, a Citibank trader wants to sell 200 million euros. In order to fill the order at the best prices possible, the Citi trader needs to split the 200 million euro trade into several different smaller trades, or orders as they're called. Ask for quotes from market makers such as JP Morgan, UBS or Goldman Sachs, negotiate the best price and then fill the order one by one. This creates order flow as buyers and sellers in the FOREX market place their extended orders. Now this is on an institutional level, but if it was on a retail level like us, all we'd be doing is buying and selling, placing trades for our broker, which would then go to the market maker, and that in turn create order flow. This is just on a higher institutional level. Order flow allows traders to see how much volume is being traded at a particular price level, and they use this information to trade and generate potential profits. So for example, price comes down to a support line and we'll be looking at the order flow, the amount of orders, potential buy orders or sell orders at that level to gauge which way the market is likely to head. Is it going to bounce off that support line and go into an uptrend, or is it going to go through that support line and continue into a downtrend? So the question we always ask ourselves is how many buy and sell orders are there at a particular level? Now, to look for order flow, a lot of traders will use an indicator based like this. Now, we're not going to use this. We're going to use candlestick patterns, and using candlestick patterns can give us an indication which way a market is likely to head. So to keep it simple, okay, order flow. Price is in an uptrend like this here, okay? That would be a bullish momentum. It means there's a lot of buying orders in the market, okay? A lot of buys, price goes up, okay? And vice versa. If there's a lot of sells or sell orders, price goes into a downtrend. So those are the two things that you need to remember. If price is in an uptrend, it means there's a lot of buy orders. A lot of traders are buying that particular currency pair. I'm sure you've heard the saying, the trend is your friend. Always buy with the momentum. What you do not want to do is trade against the momentum. You know, look at trends or momentum a bit like a river, okay? It's easier to swim with the current, swim down the river, than it is swim against it, okay? And I'm sure if you've ever took a trade against the trend, price will slowly go up and then bang, suddenly drop. It will go up, 10 pips in like 10 minutes, and then it will drop 50 pips in 1 minute. And that's because you're not trading with the trend. You're not trading with the momentum, okay? Now, we don't need to go into too much detail about order flow, but what we do need to know about it is the only way you can buy or sell or move a currency pair is either buying or selling it, okay? It's the only way you can move a market. Now, people are going to be moving it because of different reasons, perhaps an institutional level, retail level, perhaps interest rates, perhaps news, economical or economy situations, or support and resistance, trends, order blocks, Fibonacci levels. There's different reasons why traders would enter and execute a trade, okay? But remember this, you can only move the market if you buy it or sell it. It's not some mathematical equation on a computer that you just, you know what, I'm going to move price 50 pips and they type it in. No, that price will only move 50 pips if there's a lot of buying in that particular asset or currency pair. So remember, if price is in an uptrend, there's a lot of buying pressure. You want to buy with that, okay? Now, what we were talking about in the previous slide about looking for particular orders at particular levels, what that means is you've got a resistance at the top, support at the bottom, okay? And what you would get is obviously, let's say, for example, price is coming down into this support line here. That would be a lot of selling orders. Okay, now as price comes down to this level here, you can know what's going to happen is there's going to be a lot of buy orders coming into the market, okay, perhaps retail or at an institutional level where a lot of people will be looking to place orders to drive the price up. And what institutional market makers, brokers, even retail will look at this order flow and see which way price is likely to head. If there's a lot of buying orders coming into the market, it's pretty likely that price is going to reverse and go into an uptrend. Okay, now rather than looking at indicators to get an idea of order flow, we can use candlestick patterns, and this is what I'm going to teach you throughout this 5-part course on how to read the charts just using pretty much pure candlesticks. We'll add a few moving averages or support and resistance along the way, but yeah, just remember one thing by looking at this chart here is that you can only move a currency pair if you buy it or sell it, okay? So if price is coming up to a resistance area and comes down, it means there's a lot of sell orders in the market, okay? But also you need to remember that when price comes to a support and resistance level, there are likely to be pending orders at this level too, okay? Which some traders will call it market manipulation, where they take out particular orders. For example, if price comes up to a resistance line here, you know there's going to be a lot of selling orders at the top here, right? Price will come up, bounce off it, take out those orders, meaning you get stopped out, you lose the trade, and then price reverses down. Okay, now we'll cover all of that in this 5-part series, but in this video, just focus on that one thing that I've taught you. You can only move a currency pair if you buy it or sell it. So if it's an uptrend, there's a lot of buyers. If it's a downtrend, if there's a lot of sellers. If price is in a sideways momentum like this or sideways trend, it means there's kind of equal buyers and equal sellers. Nobody really has took control of the market yet. You'll get a lot of sellers orders here. You'll get a lot of buy orders here at this level here, and eventually something's going to happen. You'll either get a breakout to the upside, a bullish momentum, buy orders are taking over the market now, or it will come down. So yeah, let's jump on the charts now and actually go over order flow, trends and momentum. So on the charts now, and I've got Euro USD loaded up on the 1 hour time frame, and I've added a 50 moving average. Now moving averages are great for identifying trends, and there's different kind of moving averages you can have. You can have a lower period like a 5, 10, 15 or 20, and they would be identifying the micro lower trends, or you can go to the higher moving averages like the 200, the 500 or the 1000 period moving averages, and they would be identifying the higher time frame trend, the big trends that are happening. Now I've added a 50 moving average because it's just an all-round level moving average, and it tells me what is happening on the charts right now. What is the particular trend that is happening right now while I'm doing my trading. Now to keep it simple, because a lot of traders don't keep it simple. I don't know why they don't, because a lot of traders try and overcomplicate their trade and they try and learn a more complicated approach, and I guess they believe it gives them a better edge in the market, when in reality it doesn't, okay? Because trading's a probability game, right? We're just buying and selling based off probability. I because price is in a downtrend, I assume that price is going to go down. That is no different to if you were to say that perhaps price has come up to a Fibonacci level and you are taking a sell because you believe price will bounce off that. Okay, it's just a probability game. You can either make it really complicated or really simple. So to keep it really simple, price is above the moving average, so that tells me it's an uptrend. It means you want to be buying the market. Okay, there's a lot of buying pressure, there's a lot of buying orders coming into the market, so I want to buy the market. Okay, if you see here, its price is below the moving average, so we're looking for sells, yeah, because it's a downtrend, a lot of selling pressure, yeah, right? So here, what do you think's happening here? Okay, price is in a downtrend, so there's a lot of selling orders coming into the market, price is going into a downtrend. Yes. Now let me tell you a little secret with trading, because a lot of traders don't do this. I want everybody from now going forward to ignore everything that has happened in the past. A lot of traders or teachers out there will say that you need to look back in the past because market cycles, price repeats itself. But the problem is, what happened in the past is in the past. Okay, it's not what's happening now. I don't care what happened yesterday. I don't care what happened last week or the year before that or 10 years ago, because that was back then. Right, I want to know what is happening now while I'm doing my trading. I want to make my prediction now. So what is happening now? So everything that happened previously, we're going to ignore it from now on. Okay, we do sometimes have to look at that, but I will cover that throughout this course. But what we're going to focus on now is what is happening now. Okay, and what is happening now is price is in a downtrend. Okay, price is below the moving average, so it means there's a lot of selling orders happening in the market. Okay, so that's what we're going to focus on. And as you see here, as I press play on the simulator, you will see, hold on here, that price goes into a downtrend, okay, because it's below the moving average. So we would then start to look for sell trades in the market, okay? So can you all understand what we're doing, right? And you'll understand throughout this course that I'm going to show you that by keeping everything simple, you are giving yourself the highest probability of winning. I cannot tell you how trading or how simple my trading is, and yet it is so effective, right? I mean, I can smash high win ratios, I can make lots of money from just simple approach, and it's because I've spent years mastering that simple approach. To keep it simple, price is in a downtrend, so we're looking for sells, and what happens? Price is likely to go into a downtrend, which it is. Okay, eventually price won't, it will break above the moving average and it will start to go into an uptrend. Okay, not here, looks like we're still coming into a downtrend. Yes, okay, so we're still continuing to a downtrend. So here we're in a downtrend. Okay, now we can go into it a little bit further and start marking lower lows and lower highs. To give an example here, that was the previous low, and notice how we've just created a new low here, how that low is lower than that one. It means we're continuing into a downtrend. There's still a lot of selling pressure. Okay, and just from that, I mean, I don't know if that's going to happen, we're going to go into a downtrend, but just by reading the charts like that, we are giving ourselves the highest probability to say, look, price is going down, and it is. Okay, and throughout this course you will start to understand that, and we'll start to put all the little pieces to the puzzle together. Okay, so let's just take a trade just to end this video here. Okay, so here, right, give an example. We're in an uptrend because we're above the moving average, right? So what's that telling me? A lot of buying pressure. Okay, it means I'm looking for buy trades. I'm not looking for sells. And believe it or not, I'm sure you have done this, and I have done this as well. Let me just take it back to here, right? Let me just take it back to here. Okay, in fact, let me just take it back just a little further. Let's take it back here, right? How many of you lot have done this? And this happens all the time, right? Because you're going to have buyers and sellers all the time in the market. When you see a currency pair like this, it's in a downtrend, yeah? There will be traders out there that will go, well, because this is in a downtrend, eventually it's going to reverse and go into an uptrend, so I'm going to start buying the market. right? And how many times have you done that, where price is in an uptrend and you take a sell trade and it continues into an uptrend and you take another sell trade, and then it continues high and you take another sell trade, and then you're panicking now because you've got about 5 or 6 trades open and they're about 100 pips in drawdown, and you're like, why am I doing, you know? And it continues higher and higher and higher, and you just get a bigger drawdown, and it blows your account. How many people have done that? And in reality, it's just simple. You're not trading with the trend, you're trading against it. So there'll be two kinds of traders here. There'll be people that want to sell it because it's with the trend, and you'll get people that want to buy it because it's been in a downtrend for quite a while and they got this idea that it's going to go up eventually, right? But and one of those traders are going to win and one of those traders are going to lose, right? So keep it simple. If it's down, we're looking for sells. We don't try and buy the market because you think it's going down and eventually it's going to reverse. When it does reverse and go into an uptrend, yeah, buy it then, because you've got a confirmation price is in an uptrend. You've got more buying orders. And remember, you can only move price is if you buy it or sell it. So if price is in a downtrend, there's a lot of sellers. So don't be that little guy that thinks you can buy it and overtake all the sellers in the market, because it won't happen, right? So eventually, let's go back to simulation. Eventually, we'll go into an uptrend, which I think is about to happen here as we continue into a downtrend. Okay. We continue into a downtrend. Okay, now like I said, what I'm focusing on, let me just see where I can get into a trade, which is just about, you know what, I'm going to enter here. Okay, right, so remember what I said, is we want to forget everything that's happened over here, right? Forget it all, okay? It's irrelevant. We was in a downtrend. We're no longer in a downtrend, okay? We're now above the moving average, so we're looking for buys, okay? Now, we'll start to break it down in the next video, right? But what I'm going to do is I'm going to take a trade here simply because price is above the move. I mean, I don't know if this trade's going to win. I really don't know if this trade's going to win, okay? But I'm going to take a buy here just by looking left now. Like I said, normally I say I don't look left, but the only time we would do is when we're marking up micro support and resistance, which you'll understand in the next video. But as you can see here, we're above the moving average, which means we're looking for buys, okay? And we've got this nice little uptrend movement here. So uptrend, pullback, uptrend, pullback, uptrend, pullback, uptrend, pullback. And again, we're creating higher highs. You see how we've got this uptrend movement here? Okay, and this is what's happening now. This is what's happening right now on the charts, right? It's not happened previously, okay? It's what's happening right now, okay? Because a lot of traders can start to go into more detail and say, look, you've got a trend line here. You can perhaps say that I don't know, whatever traders believe that's going to happen here. But basically, price is making a higher high. I'm going to take a buy. And just to prove my logic and why I know this approach is so effective, I'm going to take a stop loss. I'm going to use a wide stop loss on this one just to factor in to see if price comes down. In fact, no, we won't. We'll go for a 10 pip stop loss and take profit. What should we go for? 100 pips? Let's go for 100 pips. So like I said, oh, hang on here. No, I'm going to go for a little bit bigger on my stop loss. I'm going to go for 20 pips and 100 pip take profit. So there you go there. Stop loss, take profit. Okay. Let's see if this trade wins. Oh, nice. Comes back down and retouches it. New high gets formed. Now I want to see what I'm just going to mark up here is the next resistance here. Okay. Again, we'll cover it in the next video, but I expect price to come up to this level at the top here because that's the previous low in the market or previous high. So let's see what happens. Okay, nice. See here? That's a liquidity spike, taking out a lot of sell orders here, but it doesn't matter because my sell orders down here. I'm way ahead of everyone else in the market. So we come up to this level here, which I kind of knew that was going to happen. I'm expecting a pullback to happen. So what I'm going to do, just to give you an example, is I'm going to close. Can I do it on here? Trade. Yeah, I'm going to close a percentage of this trade. So close part of it. I'm going to close off 0.3 lots. There you go there. So close. I've already took partial. I'm going to move my stop loss to break even. I'm now in a risk-free trade. I've now made nearly 2.7%, and I'm in a risk-free trade. I'm going to make some more money now. So let's see what happens. Now, obviously, we're going to pull down from here because we've got a resistance. So I know, again, going back to what I said about selling orders, buy orders, where are buying and selling orders going to happen? Well, I know a lot of people are going to try and sell here, and a lot of selling orders are going to happen because of previous structure. So I know there's a lot of people going to want to sell here, but looking at price, it's in an uptrend. So which way is it likely to head up? Uptrend. Okay, we might get a pullback. Okay, and we do get a slight pullback, but do we break? I want to question. Yes, we do break. We do break above it. Nice. So we continue higher. Okay, do we? Yes, perfect. Okay, and as you can see here, if we just get rid of all these blue boxes here, can you see that typical price action movement? Uptrend, pullback, uptrend, pullback, uptrend, pullback, uptrend. And just by reading the moving average and by identifying the switching orders, the switching momentum, I could see we were going into an uptrend. And eventually, we will then reverse and go into a downtrend. Let me just see what happens. Okay, we go a little bit higher. We then go into, we go below the moving average, and we go into a downtrend, and we start looking for sell trades. So keep it simple. What I want you to do going forward now into the next video, which is probably going to drop in the next few days, is remember, we're going to be trading with the trend. We're going to identify the trend using a moving average, and if price is above the moving average, we're looking for buys, and if price is below the moving average, we're looking for sells, because we're going with the order flow of the market. Yeah, got that? I'll see you in the next video, and thank you for watching.